When you're investing for the long term in ETFs or index funds that track the S&P 500 or the US Total Market Index Fund, years like 2022 are to be expected. When the market goes down, guess what? That is your opportunity to buy at a discount. That means you may want to ramp up your buying of ETFs and index funds into your investment portfolio because there is that expectation, if you look at the past 30, 60, 90 years of investing, that the US stock market has continuously increased over the long term. And when you have that long-term investing strategy, that's where you're going to make your money. So I always see headlines and I always see people on TV talking about this is a bear market, this is the end of the US stock market, this is the end of investing altogether. And that's just far from the truth. That's just far from what actually is happening right now. The stock market being down just means that the stock market is down. So whatever you're interested in investing in, an ETF that tracks the S&P 500 or an ETF that tracks the US total market, you're going to be able to get these much cheaper than if you would have invested in these last year. I bought the US total market Vanguard ETF last year for about $230 or so. Now it's currently down below $200. And guess what? I'm okay with that. I'm okay with that because I'm continuously buying and continuing to buy more shares and more shares of that ETF and putting those into my portfolio because I'm holding for the long term. As long as you're investing for 25, 30, 40 years, and then you also have a plan to withdraw that money after you retire, whether that's in your 50s or 60s, all the way through your 70s, 80s, 90s, until you're no longer alive, that's going to be part of the strategy of you building wealth and then adjusting how you're investing later on in life. So right now, if I'm in my 20s, 30s, 40s, and maybe 50s, early 50s, I am going to lean heavily toward investing in index funds and ETFs that are going to be invested in mostly stocks, the S&P 500 or the US total market, a little bit of international equities, a little bit of international stock index funds is not a bad thing as well. That's part of my strategy currently in my 401k. And I can tell you for the last 12, 13 years, this has served me well. Even in those years where the market was down, I stayed with the strategy, I stuck with it, and it's paid off huge dividends. I mean, I can't even tell you how amazing my portfolio looks, but I want you to understand that you've got to be wary of who you listen to and who you're out there talking to that's going to tell you, oh, you need to sell these investments, you need to stop buying this because the market is down. No. If it were me and I had an opportunity to buy the S&P 500 index fund or ETF or the US total market ETF or index fund right now, that's what I would be doing, and I'd be doing more and more and more of it because, again, what history shows us is these bear markets, these down markets don't last long, maybe 2 to 3 years. Of course, that could possibly happen for sure. It's happened in the past, but over the span of 20, 30, 40, 50 years that you're going to be investing for, the US stock market always recovers and continues to deliver on its promises of being the best place to invest your money, to keep up with inflation, to be able to retire and have something to live off of when you're in your retirement. That's where I'm going to be focusing my money and my energy in this year 2022, is just continuing to buy more and more of those equity index funds like the S&P 500 or the US total market. So if you're looking for specific index funds or ETFs, I still like VTI, Vanguard's US total market ETF, or VOO, Vanguard's S&P 500 ETF, and you can always find the equivalent index fund that's going to be available to you. And you should see them on the screen so you don't have to go and search on Google, but you can always find similar ETFs and index funds at Charles Schwab, at Fidelity, at any other brokerage firm that you may be investing with. So that way you can continue to build wealth and do the responsible thing of investing and continuing to stick to that strategy of never stopping your investments, no matter what the market is doing. Of course, there are going to be more years like this to come. There are going to be good years and there are going to be bad years, but stick with your strategy and don't let the headlines and the media dissuade you, discourage you from doing something that you know you should be doing, and that's investing and building wealth for the long term so that you can achieve financial independence. Thanks for watching. Don't forget to subscribe, and I look forward to seeing y'all soon. Peace.